Chairman and Managing Director, joins in now. Good afternoon, Mr. Banga, and thanks so much for speaking with CNBC TV18. First question, could you tell us how this valuation of $100 million was arrived at? Because there are a few in the street who believed that valuing it at 2 times price to book is a bit expensive, considering that Oath North Bank is, relatively new after getting the license.
Yeah, so to just step back and to, run you quickly through the process of, first of all, reaching at a conclusion that this transaction is something which is going to add value to the company. The Indiabulls balance sheet today stands at almost 70,000 crores, and over the course of the last 6 years has been compounding at an average rate of 25% every year. My sense is that we should be crossing about 1 lakh crore of balance sheet by 2017 and 18, which is in line with the growth trajectory that we have put in place for our shareholders, and also the guidance that we've given. Now, given that we had, as part of our board, set up a committee under the chairmanship of Dr. K.C. Chakravarti, the former Deputy Governor of the Reserve Bank of India, to figure out how we should be efficiently financing ourselves. Deposit-taking franchise is what was arrived at as the missing piece as far as our entire liability franchise is concerned, and the board decided that we have to take concrete steps to establish our credentials to be able to move on to become a deposit-taking franchise. The unprecedented approvals for an Indian corporate to invest in a foreign bank given by 4 different regulatory agencies, 2 in India and 2 overseas, is a reflection of the discussions and the thought process behind this entire transaction. And now coming specifically to the transaction, Oak North Bank is a bank which got licensed earlier this year. It has been valued at about 1.9 times book. It had to be valued at something greater than book because it already was in receipt of a license. It had put together a management team. It had also started accepting deposits and had extremely credible and illustrious board led by Lord Turner, who's the former chairman of Financial Services Authority of the UK. Yeah. And one of the moving numbers as far as these valuations is concerned is where is the eventual IPO type of pricing which is going to happen, because this in effect becomes a private equity transaction. So if we look at banks which have a similar character, have been recently licensed and have been able to reach IPO in 3 years or so, 3 to 4 years of operation, they're all trading at north of 3 times. So there was a little premium paid for A, the license, and 2, to be able to get a controlling stake. So the letter that we have received from the Bank of England as far as this particular investment is concerned talks of a controlling stake. And without a controlling stake, this transaction would have made absolutely no sense, because it would have had no credibility benefit whatsoever to Indiabulls Housing. So it is our step to kind of build that credibility. And just to spend 30 seconds more on this, the financial impact of this $100 million on a balance sheet of 70,000 crores is that it is about 1% of my balance sheet. And the supposed loss in earning power is to the tune of some 18 to 20 crores. In the context of the fact that the company last year reported 1,900 crores and of profits after taxes, and this in the first half has already reported, at 1,066 crores of profits after taxes. It's like less than, I think, a week of profit. So it's a very small investment with tremendous strategic upside. And while some shareholders may not have appreciated the deal today, I'm sure that as management engages with shareholders and explains the tremendous benefits that can accrue to the company over the next 1.5 to 2 years, everybody will be appreciative and supportive of this transaction.
Okay, Mr. Banga, that point is taken. But one of the concerns which has been raised by the analyst community is with regards to, how the deal is going to be funded. You all just raised money via QIP. Is any of that money going into funding this deal?
So let's go back to financials of 31st March 2015. We did the QIP, concluded the QIP in September of 2015.
Yeah.
As of 31st March 2015, the company had a balance sheet of around 60,000 crores. So at that, given balance sheet size of 31st March 2015, this was just over 1%, 1.1% of our balance sheet as on that day. At that time, the company also had a net worth of approximately 7,000 crores. So this was about 8% of our, 9% of our net worth as of 31st March 2015. And more importantly, from a financial services operation, we were already sitting at a capital adequacy ratio of approximately 20% as against a regulatory requirement of 12%. And we were geared only about 6.3 times as against our own guidance on gearing cap of 7 times.
Okay.
So we had all the ammunition even before the QIP as far as doing this transaction is concerned. Having said that, shareholders' views have to be really respected, and I'm going to be explaining to each one of them as to the benefits of this transaction which will accrue.
Okay, fair enough. So that's on the funding perspective. The point that I was making is that they would have liked to know that this transaction was something that could have been on the cards, or it might have been a strategy that the company was considering. Those are the walk-out numbers, by the way. It's above the city estimate of around 82 odd crores. So 107.6 crores is where the walk-out profit has come in. So that stock is in fact recovering from the day's low. We'll get back to the walk-out numbers, but Mr. Banga, the other point being that the deposit taking would then just be a strategic initiative for you to possibly show your strength in terms of deposit taking and hence strengthen your case in India. There would not be any direct correlation from you, getting a license directly in India. Am I correct in that analysis?
There is no second thought of the fact that the company's core business is of mortgage lending. The company is not going to be diverting its management resources or additional financial resources into running of this bank or doing anything overseas. The company, as it continues to grow its balance sheet at about 20-25%, is aware of the fact that it needs to, from time to time, take very substantial qualitative steps to ensure that this growth that we have charted over the last many years continues for the next many years. The CAGR numbers that we have persisted with also continue. This was part of 3 very important qualitative steps that we had to take, which we had started taking and which are, so to say, the building blocks of growth that we will take us past 2020. Those 3 qualitative steps are done. One was to get our loans against property portfolio independently rated on a loan-by-loan basis by a variety of rating agencies. That part is done. The other was to raise capital, which would become growth capital for business to be conducted over the next 5 to 6 years. And we are now capitalized enough to go on till 2021. And the third was this, which will in due course of time have a credibility rub-off and will allow us to establish a deposit franchise. This is also done. So I'll go on record to say that 100% of the capital that we have in this company would be retained only in the mortgage business.
Okay.
There is nothing else that is on the radar. And as far as this investment is concerned, as I said, the diversification and strengthening of the liability profile and the liability franchise of the company is something which is often discussed and continuously discussed with our shareholders. I have had several discussions with them about the fact that the real franchise which Indiabulls Housing represents today is the liability franchise we are creating. Yes, unless there is a regulatory approval of some sort, we are not the type of management which will be conjecturing about what may happen if we receive an approval.
Okay.
There is no certainty about a transaction till the time regulatory approvals are not received.
Okay. The other point which raised eyebrows, and I'm just quoting what I've heard in terms of feedback, was basically how this deal was arrived. For example, the past relationship, we do understand that the promoter of this particular bank is basically a part of the LN Mittal group, which was one of the early investors in the Indiabulls group. And hence, maybe that might just have been too close for comfort, or maybe a lack of objectivity kind of investment. Your comments on the same, considering that the promoters also invested 10% in this?
Yeah, so Rishi Khosla, who's the co-founder and CEO of Oak North Bank, in the year 2000 was part of Mr. Ellen Mittal's family office, and in 2000 had given us $1 million, all of $1 million, in a co-investment deal with another venture fund which went by the name of Transatlantic Corporation. He left Mr. Ellen Mittal's office in 2002 and then set up Opal Partners, which he sold eventually for $700 million to Moody's. And after that, he has set up this bank. So he's been an independent finance professional who's built up a very